Very good afternoon, everyone. Welcome to yet another uLaw webinar. Today's webinar is accredited and approved for 1 hour of professionalism credits by the Law Society of Ontario, the Law Society of British Columbia, as well as the Law Society of New Brunswick. So for friends and colleagues and clients joining us and other legal practitioners who are joining us today from these 3 different provinces, we welcome you to this webinar, again confirming that it has been approved for 1 hour of professionalism credits, and the topic that you would search for would be Disbursements Demystified. Okay, and this is for 1 hour of professionalism credits. Now, like every webinar, our webinar today has a set agenda, and our goal of providing this webinar is to provide a little bit more guidance and some feedback and insight into management of client expenses, or otherwise known as disbursements. And before I get along with the agenda, I do kindly request, as some housekeeping, that you mute your phone lines if you can, and kindly do use the chat window to ask any questions that you may have during this session. We wanted to keep this session as interactive as possible, as we learn more as we collaborate. And kindly do use the chat window. Our support staff would be happy to answer any questions you may have. Okay, so moving along in our agenda today is quickly understanding what are disbursements, giving it a quick wiki definition, and how do you plan on managing them. Some insights of some best practices that you could consider of how you would go about managing those disbursements. For those who are not aware, you are able to, as a legal professional, use your trust account to pay for disbursements. And if that's the habit that you have based on your practice, we're going to talk about the benefits of why not just use your trust account to pay for all those disbursements, right? What are the benefits? And we'll look at both sides. Moving along with our agenda, we'll then talk about how do you manage disbursements? Do you use your general account to pay for expenses, client expenses, or do we combine that with your business credit card? Are there advantages to having multiple business credit cards, one exclusively focused on your own business and another one exclusively meant for client expenses? That way, helping you to reconcile and manage your books simpler. Okay? And last but not the least, we've introduced this concept, and I'm sure you're aware that you, as the owner of your firm, if you spend your own money, which we call owner's pocket in uLaw, then those are expenses that your firm would have to pay you back. So we'll look at how you could use these 3 different pragmatic avenues of how you actually pay for these general disbursements, and we'll look at some examples there as well. And then focus on some types of general disbursements, or disbursements in general, I would say. You've got your billable or actuals, which can be both disbursed out of both general and trust, such as a court fee or an application fee, which are the price point on these expenses are determined by the province. You don't determine them. You can just randomly come up with numbers, and they're fixed. And in some cases, they're tax exempt. And basically, you pay for the court fee of $100, and you disperse your client exactly for those $100, not a cent more, not a cent less. Unit rate expenses, such as faxes, photocopies, right? And then you've got mileage, where you can then, these are all things that you, as the legal professional within your retainer letter or engagement letter, can determine right from the get-go as to how much you would charge for mileage. And even as much as outsourced work. So if you have stand-ins and if you're busy and if you have a friend or another colleague who's standing in on your behalf and you need to pay that other paralegal or lawyer for that work, then that's what we consider outsourced work. As an example, we'll look at how do you manage and track those expenses as well. And finally, having gone through what disbursements are, the types of disbursements, and some best practices of how on a pragmatic basis you would manage these disbursements, we would finally look at the expectation from the law society, from the different law societies that are governing you based on your jurisdiction when it comes to disbursements, the reports and documents that you are obligated to generate and produce on a timely manner. Okay, so this is a very tight, packed 1 hour that we're going to try and cover as much as possible. And based on availability of time, if it's more prudent and if it makes sense, we'll certainly spend some time to use uLaw as an example and walk you through maybe a couple of expenses and some reports. Okay. Moving along, we've got this wiki definition of disbursement. Now, for those who did attend some previous sessions where we talk about both office and client expenses, we had defined a very similar slide to talk about client expenses, which are in this case disbursements. So what is a disbursement? It's certainly the act of paying out or disbursing money from your business, right, as a legal professional on behalf of a client or in connection with a specific transaction. Okay? So let's focus on the layman's and the accounting terms and the law society audit terms, which are more meaningful. So from a layman's term, it's as simple as expenses occurred for your client by your legal office. Okay? These are client expenses. Let me put it simply. From an accounting perspective, right, what it really means is you are obligated or required to record the transaction in your books as and when it happens to balance the accounts, especially when you spend, invoice, and recover that expense. Okay, so very simple, recording these transactions that happen in real life. These are expenses or transactions, recording them and having them available so you can balance your books, compare, the debits and credits, and then balancing and reconciling them. Bottom line, from a law society standpoint, if you have it as a discipline to manage this information and all the books necessary right from day one, then it just makes your audit process, makes your whole process of being a legal professional and the documentation that goes along with it much more simpler. Okay? What do you take out of this slide? Bottom line, a disbursement is expenses spent on behalf of your client for a specific transaction. In your case, this could be for a matter, right? All right. So when it comes to disbursements, so let's say you have a client, you've just retained that individual client, and you've obviously outlined, right, the expenses, how you would, the type of charges, all your disbursement rates, and how much you charge them. Fantastic. Now let's assume you have both a trust account and a general account. Okay, the trust account is where you're going to, as a business, accept retainers, which are money that you get in advance from a client. When you have money in retainer, you have the option of either using the trust account or the general account, or some clients do a mix and match depending on the type of disbursement to spend that money from both trust and general for a particular matter. So let's say you create a matter, and let's say there's going to be a bunch of disbursements based on the silo of practice. So if it's small claims, there's a certain disbursement, there's a certain DNA to the type of disbursements that you would have. If this is a family law, there's a certain type of disbursement structure or standard protocols that you follow, standard expenses that you have. And based on the style of practice, you have these different types of disbursements that are natural to it. There's two options here, and that's what we're trying to outline here. We've come across individuals and clients and friends who actually didn't recognize that they could actually pay disbursements right out of trust. So this is just to reiterate that you do have that luxury, that if you have the practice of accepting retainers, you do have the luxury of dispersing or paying for that expense right off your trust account. A great example is that of a court fee or as we looked at one of our types, let me just quickly go back just to show you. We looked at billable as one of the type, or actuals as I call it. So let's assume there is a court fee that you want to spend right out of your trust account. So as part of creating that trust account with your bank, I would assume that you would actually have checks, trust checks. So one of the most common examples is that of a court fee that's being dispersed right out of your trust account, because this was never your money to begin with, right? So you were, especially with actuals, you're not looking to make money on those, or you can't really. So if that is the case, for those actual disbursements, maybe it's just simpler to pay right from your trust account. So you don't have to deal with the headache of having to pay for it in advance, making that disbursement transaction part of an invoice, generating that invoice, and then recovering that expense. Yeah. So if you have trust, why not pay straight from trust, making it simple? So we looked at how court fee is an example. It could be an application fee, right? And what is the advantage of doing that is that when you pay the money out of the trust account, the money is taken directly out of the money that's already in the trust account, which means that you do not have to recover that expense, as I explained, by paying for it in advance, generating an invoice, and then recovering it. And as I said, it is not your money to begin with, and why not just pay for it straight off trust? That way it reduces, bottom line, the amount of bookkeeping that's required. So that truly is what the bottom line is. With trust account, keep it simple. We have clients that, let's say you have a fee of $500, what you're expecting, and knowing your trait, knowing that this is a small claims, and let's assume $100 is going to be the standard disbursements, we have clients that actually ask their client, their end client, for $600 of a retainer, and $500 would be their fee, or $665 in some cases, where $565, $500 plus your HST in Ontario would be your fees, legal fees, and then $100 would be your disbursement or expenses expected. And doing that keeps it very simple. Books are clean. Reconciliation is a breeze. Okay, so that's a great example, and maybe we can try and take that example if we have time. Now let's assume you're not in the habit of, or you don't have a trust account. Based on your style of practice, you decide it's really not something that I should look into. I don't have a trust account. And then comes the options now of you being able to pay it from your general account. Okay? When it comes to general account, and this is where you pay for the expenses on your client's behalf or disbursements ahead of time. So you take the risk of paying it on their behalf. Even if you had a trust account, let's assume the other case that you still want to use your Aeroplan point card to gain some points, and then pay for it in advance and then recover it or move the trust money from trust to general. Bottom line, if you're paying expenses or disbursements out of general account, you do need to recover it, which is paying for it in advance, generating the invoice, and then either accepting a client payment if there was no trust money involved, or if there was trust money involved, then moving the eligible trust money from trust to general after that invoice has been generated. So let's assume you are paying out of general. Then you have some further options. Now when you set up your business, obviously you're going to go to the bank, set up a trust account maybe, but also certainly set up a general account. Okay? And majority of time, a lot of the transactions that happen in your legal business, especially expenses, both client and office, would transact out of your general account. Okay? Now, in addition to this general account, it may not be a bad idea to actually have some additional general accounts. When I say general accounts, assets that are that you can use for general disbursements, such as a business credit card. With banks being more flexible to promote entrepreneurial pursuits, right? There are some zero-fee credit cards that you may have. There are credit cards that give you Aeroplan points. There's some benefits to having cards. And what we suggest at uLaw is if you can afford it, or if you have the luxury of getting these business credit cards, if you can get 2 of them. I mean, if you have 1, great. If you have 2, even better. Having kind of a separation between expenses that you would pay for your office and expenses that are exclusively meant for your clients. But if you don't think the number of transactions are going to be that great, then maybe just 1 business credit card would suffice. But if you are in a practice area of practice where there's going to be a lot of transactions between your business expenses and your client expenses, my personal recommendation is certainly to look into having multiple credit cards so that you can exclusively use a credit card towards client expenses. So reconciling that is fairly simple, and then having a credit card for business or office expenses, and reconciling that would be fairly simple. You're not confusing which money was for what. Okay? Now, what are some of the salient features when it comes to dispersing from general? 1, you do need to, I've said this 100 times already in this webinar, so I apologize. But again, trying to bring home the point that when you pay out of general, it's a recoverable expense, and you are required to raise that invoice, include that expense as part of that invoice. Very important is to include that $100 you paid as an application fee as part of that invoice so that your client recognizes, and it's a formal way of showcasing that expense that you've incurred on their behalf, right? Making that part of that invoice so that it frees up the eligible trust money, or it frees up the opportunity for you to accept that as an accounts receivable or a client payment. Okay. Having said that, what are some of the key aspects to capturing a disbursement? What is the essence of capturing a disbursement? Because this is what happened in real life. Number 1 is capturing the date. So when did this transaction happen? Because that's a given, right? If it happened in real life, certain that it happened on a certain date. How much was the amount? Okay. And a segue to that were there taxes involved? So if it's an application fee, as I said, there may be a tax exempt. If this was a fax, maybe there is taxes excluded, or it needs to be added to that. If it's photocopies, then you have tax mileage. Depending on the transaction or the type of disbursement, there is an amount and an applicable tax, and again, based on jurisdiction. The method of payment, okay, very important to capture because this becomes a part of many accounting documents that are required by the Law Society, such as a journal. The journal most essentially needs to capture the method of payment. Did the client, or did you pay using a check? Did you use a credit card? Did you pay out of your cash, your owner's pocket? So really, recording the method of payment is very, very important. It actually helps you reconcile your accounts as well. Associating, because this is a client expense, very important that you associate it not just to the client, but to a specific matter. Even if you're dealing with multiple matters for one specific client, it's very important to consider dispersing it for a specific matter. Okay. And as I said, finally, recording whether this was paid out of your general account, bank account, did you pay it out of your business credit card, or was this your out-of-pocket or personal pocket expense? And the last option, and this is an interesting option, doesn't apply to everyone, but let's say you're running a legal firm with multiple individuals involved. Sometimes your assistant or coworker or someone else in the office may have paid for that particular expense. Maybe they went to Staples, but they recognize I'm already here. I might as well fax this on behalf of this client. And maybe they paid for it from their own money, in which case your law firm or legal firm would then owe that individual the amount. Okay? So that's what someone else really means. So again, what you're taking out of the slide is you do have the option of spending that disbursement both out of your trust account and as well as your general account. Be wise, be aware of the type of disbursement, your situation, and if possible, if you think bookkeeping is not necessarily a cup of tea, and if you want to reduce that, by all means use the trust account to disperse your clients. Okay? Bottom line, you still need to capture all of the pertinent information that we just looked at. Okay? And this may just be a bit of a repeat itself, but again, stressing on the point, when and how do you recover your disbursement? Okay? So we looked at general, and that's exactly what I'm going to talk about, general disbursements. Before you raise an invoice truly is your formal document to outline the fees and disbursements, and it's a very important transaction, not only in your journals, but also in your fee book, which is a law society document that's required for you to present. Yeah. So recording the expense information with, all the information we just looked at in the previous slide: date, amount, taxes, method, who was it paid to, etc. The third important line here is whenever you're dispersing out of general, you may actually have the option of marking up that expense or marking down that expense. And this is only possible if it's not a billable disbursement and if you're not paying out of trust. So let's assume you're paying out of general. And let's take an example of outsourced work. So let's assume you have to go to the court and you are unable to go to court that day because of, a reason, and you actually request a colleague or another friend, a legal friend who's in the business, to be your stand-in. And let's assume this paralegal then works for you for that day. He or she goes to court, and then they spend the effort. They charge you, at the end of the day, $200 for the effort of having represented you in a matter on your behalf at court. Now, you may then decide to whether disperse your client that exact $200, or you may decide to mark down that expense to $150, thereby taking a $50 hit as a business expense. So this may be something that you go out of your way, okay, to keep your client happy or stay competitive as a price, whatever it may be, to reduce that expense. And this is only possible, as I said, if it's not an actual billable on actuals, and if it's not coming out of trust. Or there could be a case where you mark up. Either ways. Important for you to make that determination, keep it the same, mark down or mark up, and then decide to raise the invoice. Once it's raised, or generated rather, you've then freed up, as I said, either the eligible trust amount that you move from trust to general, or are willing now accepting that client payment or the specific invoice amount, which includes that disbursement. Okay, so either get paid from trust transfer, from trust to general, or accept a client payment directly into your general account. If it is paid by you or someone else in the firm, then you move that money either to yourself or pay the third party from your firm to that individual. Okay. And the fourth bottom line is in doing all of this, so all the things that we just discussed are all part of, let's say, practice management, right? You're just managing your practice, you're managing the transactions, and recording it as and when it happens. And the next aspect to your business is also reporting it in the form of ledgers, journals, and law society documentation that captures these transactions. So they want to make sure that you're doing the right thing, you're staying compliant, you're doing all the legal things that are mandated by you, or on you rather, sorry. And they want to look at all these record keeping. And that's why they want to see that in the form of ledgers and journals. Okay. So let's take a moment, and I spoke about this briefly in my previous slide. All right, so how do I determine now which disbursements are best suited for trust and which disbursements are best suited for general, or both? So we have this quick snapshot, and this entire presentation is going to be made available on our YouTube channel, and everyone who's attending today's session will get a link as well. And so I'm just going to pause on this. If you want to just look at it and review it, you can. But at a very high level, as I said, if it's billable on actuals, by all means, use either trust or general. You can use both. If it's a unit rate or a mileage where you determine the price, such as fax, such as mileage, then general account or general disbursement is the best candidate for that. We've kind of summarized it simply. If the recovery of expenses are on actuals, both trust and general are great candidates for dispersing. So you can either use the trust account or the general account. If the recovery of expense is with a profit margin or with a loss margin, where you're going to mark up or mark down, then only the general disbursement will apply. We spoke the case where you're paying another paralegal. Now, if you're exactly dispersing the amount that your third-party consultant charged you, if it's on actuals, then yes, you could still go ahead and use your trust account to pay for it. But if it's associated with a profit or a loss margin, then kindly do only use the general to pay for it. Because the bottom line here is trust money needs to be so candid and clear of money coming in and going out. There can't be massaging of dollars in the trust account. Okay? That's why we do reconciliation. And even if there are bank errors, which are an exception to this rule where it's out of your control, sometimes the banks do make errors and they may either deposit or withdraw money from your trust account. It's your duty to actually catch those transactions before your monthly reconciliation and see if you can get that dollar amount adjusted. Yeah. But the bottom line in all of this, these guidelines are meant to keep your trust account sane, and that way reconciliation is a breeze. Okay. Now that we have recorded this, let's say we've done, as a legal professional, we've captured all the movements as to when it happened. We determined whether it was trust or general. We looked at the final obligation is to record all of these transactions in ledgers and journals. So let's look at what those documentation requirements are. During audits, and this is part of an audit requirement, this is part of the Law Society's published requirements by auditors, right? That's why we've got that. You are required to provide disbursement ledgers for both trust and general, okay? They are reviewed. Every transaction that's dispersed needs to be recorded in disbursement ledgers. That's given. So whether it's a trust ledger or whether it's general, it needs to be recorded in that ledger. And as I said, based on the type of transaction, if you've transacted from the trust account, it's a trust ledger. If it's from the general account, general ledger. Fairly simple, one-on-one there. And it's important that each and every ledger has a running balance by date. Okay? What that really means is, let's say on the 1st of March, I had $500, and on the 31st of March, I actually have $200. That reduction needs to be married to a specific date, and you need to have that running balance. So if you really look at our trust ledger, or here's a great example. If you look at the general ledger here, you've got fees, you've got a column called expenses that are really disbursements on behalf of, or expenses on behalf of client. Obviously, these examples don't have disbursements in them, but part of that ledger, not only do they capture your fees, HST, they also capture the expenses that are part of that invoice. Okay, so we'll look at some examples further on. So we looked at ledgers, and now the next document or set of documents are the journals. So ledgers, trust and general, journals, trust and general. And what is the big difference? They kind of sound different, but it almost seems like the information should be the same. What really is the difference between these two types of documents is the fact that journals record not just the activity, not just the amount, but as I said, they also capture some extra information such as method of payment and purpose. Okay, so the journal not only captures that this was the amount paid, they also capture how did you pay for it? Okay, this is going to actually help you reconciliation as well. Because if you paid out of your check using a check, and recording that you did pay out of your check is going to help you reconcile your accounts. So what's different in journal? As simple as the extra columns, which capture the method of payment as well as the purpose. Okay. So here's a great example. This is a general disbursement journal. If you look at it, the dates are the same. Ledgers and journals both capture the date. Very important for every transaction. But in addition to just the amount or the particulars, the extra two columns are the method. So I use check 001 to pay for it. And who did I pay this to? Well, I paid it to Mr. Larry, the landlord. And that was my rent. Obviously, this is not necessarily a client expense. But the information is still the same. So if this was a disbursement, this would say check 001 paid to the Ministry of Finance. Particulars is application fee. Could also have information about the matter number or the client name, and then comes the amount HST paid, total paid. Okay. And the third document, which I highlighted early on, is also the fee book. Very important because the fee book does capture the transaction about your disbursement. So the fee book, though the name is misleading, it's not just your legal fees. The fee book is also, it's an encapsulation of your legal fee and your disbursements. Okay? So the fee book records all fees and disbursements raised in an invoice that needs to be recovered from the clients. It records the invoice number, which client was billed for it, and the associated taxes that were collected. Very, very important is the taxes. And because we're in Canada, it's a given that there are taxes involved in certain types of transactions. Now, you may actually not collect legal fees HST from your legal fees, but you may actually charge your client for the HST that you have paid, right? You still need to capture that. So here's again another example. You've got the date, the invoice number, and this is an example of a fee book. An invoice number, which client was this for, the amount, was there any HST part of that, and the total. And the fact that disbursements are a part of fee book, it's important that you generate this document as well. So quick recap, having done all the good work, there are three important documents to keep in mind: the ledger, the journal, and the fee book. And the ledgers could be both trust and general. So in total, 2 ledgers, 2 journals, and a fee book. 5 documents that we've counted so far. And those are all the touch points of the disbursements that you have, or the expenses on behalf of client expense. Okay? Now let's quickly look at, all right, having said all of this, how can you as a legal professional accomplish all of this? There's just so much to do already with regards to setting up your business, doing all the research so that you're up to date with all the legal aspects of your business, right? Making sure that you're aware of changes in rules and regulations and how you can better, win the case for your client, all that, right? On top of that, you have your business to manage, and on top of that, you have all these legalities and documents that you need to generate and keep in time. So how do you do all of this? The old school way, obviously, was to do this in a very manual, paper-based form. The number of transactions, the number of clients, really depending on your practice, may sometimes give you that luxury of, if you're just doing one client a month or maybe one client every quarter, and maybe you have the time. And if you have the time, by all means, you could do this in a very manual way. And if you have help and if you have a lot of money to spend, you could also have additional help that you can get to do this on your behalf. But today's solo practitioner, legal professional, and with the advent of technology, these are forces to be reckoned with. The solo practitioner today is dealing with multiple files, multiple clients, various different worksheets that has to be managed and maintained. And a legal accounting software, regardless of any software, as long as it's a legal accounting software, gives you the capacity and the opportunity to not only record the transactions as and when they happen, okay, but they also ensure that each and every touch point that you capture become accounting touch points as well. And the accounting touch points manages all the requirements of the Law Society. The practice management touch point gives you the freedom and the flexibility to capture these transactions as and when they happen. So it's just really two things. Capture the moment, record it so that you can generate reports for your audit, right? Legal accounting software, especially if it's cloud-based, even better, because you're going to be able to capture this at any time, anywhere, using any device. Now, that's a reality of today's individual. We obviously have a lot of statistics to show that we spend a lot of our time on our mobile devices. We're not necessarily on our desktops or even laptops, for crying out loud, in today's generation. We're all about the tabs and the phones, right? The legal accounting software has come a long way, such as uLaw, that gives you the flexibility to access this information, capture such information, and generate information from anywhere, any device. The third aspect that we didn't talk about, one was capturing the moment as and when it happens. The second is obviously providing those 5 documents. Now, there are additional documents that are required as obligations, which are reconciliations. You have trust and general, right? What those are really ensuring that what the bookkeeping software knows as transactions that have happened in life mirrors or marries with the actual transactions that have happened in your bank, okay? And the reason you reconcile is to ensure that the numbers match on a month end, for example. And the advantages of legal accounting software is all you need to do is capture the moment, because only you can tell us what happened in your life. The rest of generating the reports, the ledgers, journals, the fee book, as well as helping you reconcile, the legal accounting software can do that for you. So it almost becomes your paid help, because the software does the help for you. And the only thing you need to train yourself is figuring out how to enter that data and what buttons to push to get the reports that are required. Okay? Even better if the format of these reports can be compliant, because that's one of the accountabilities of a legal professional, is you generate not just random documents, but you generate it in a format that's compliant and easy to appreciate by your auditors. And obviously the fact that it can, accounting softwares today can give you the ease of use, as I mentioned, as well as give you powerful dashboards and analytics for you to take proactive steps to improve on your business, be more productive, and actually do better than what you are today. Look to improve. Now, one important question, and we added this slide at the end, one of the questions that came about from our previous sessions was, okay, why do I have to deal with this? Can I just not deal with disbursements at all? Just make it part of my fees, maybe? And the simple answer is, it really comes down to the area of practice. Now, if you're dealing with a certain area of practice where there are no disbursements, we would like to know about that, because I could certainly use that as a great example. But for a good majority of your practices, legal practice, there are disbursements that are dealt with. Okay? If this is a very simple matter and there was no disbursements, it's a flat fee, then absolutely, you don't have to capture disbursements. This session and the highlight of why disbursements are captured are only meant for areas of practice and for legal professionals for whom disbursements are a reality, and it's important to capture them because there are various factors to disbursements, right from the amount to as intricate as taxes. In certain provinces, right, you have multiple taxes. So it really comes down to nitty-gritties of being prudent about not only capturing these taxes, but also reporting on them, right? And the importance of why you record them is especially if you're doing it through your general, which seems to be the good majority of the way legal professionals do it, then that's your money to be made. You need to recover that. Unless you record the transaction, you can't necessarily make it part of your invoice, because if you may forget it. And if you cannot make it as part of your invoice, you don't have the legal right to recover that expense from your client. Okay, and then that's just your money lost. That's just your business money that you are unable to recover, and that would be reported as a loss or a write-off to your business, right? And it impacts your profit margin, and we know how hard that can be for a legal professional. So we wanted to add that slide that, disbursements, for those it's a reality, it's important that you capture them for all these standard reasons. Okay, so I do have another 18 minutes, and I like to use those 18 minutes to kind of give you some, a perspective, a practical perspective. We've been just talking, and you've just been very patient and wonderful listeners today, but we want to use the next 15 minutes or so to give you a simple example, and I'll be using uLaw as just as a way of demonstrating the concept. In no way is it meant to demonstrate the product. We do other non-CPD sessions where we do exclusive uLaw webinars. This is purely to explain the concept, and before, even either now or during my session, I once again do kindly request you to use our chat window. For one, give us your attendance. There's going to be no roll calls, but just give us your quick attendance so that we can capture your name, just in case we are being audited for attendance from a law society standpoint. And secondly, kindly do ask us questions, because that's the whole point. Learning is very collaborative, and again, request you to answer questions, or ask questions, sorry. All right, so as part of all my demonstrations, I use this fictitious legal professional, Roger Moore, and I'm going to quickly add a client, and I'm going to exclusively demonstrate the disbursements. So we're going to create a client, we're going to create a matter, and the disbursements are going to be for that particular matter, okay? Let's say okay, we're going to say it was an advertisement. Let me quickly capture fake address, okay? And I'm going to save that client. So just added, it was just a simple client intake form where I just added a client, and maybe there was an advertisement, it was a walk-in, the person showed up in front of my office, and again, there could be various examples. We're actually going to be doing a series of webinars in the coming months where we're going to focus on specific areas of practice and disbursements and types of docketing for specific areas of practice. But today I'm going to take my very old example of a fence issue. So let me now create a matter, a file, and I'm going to say this is a fence issue with a neighbor. That would be a small claims matter. I would say just on fence issue. Let's assume there is a bunch of disbursements to be dealt with. Okay, so let's go ahead and click the Save button so we generate a file number, and we're now ready to go. So this file number is a unique reference to this particular matter for this client Julian, and your disbursements are not going to be for Julian, but are going to be for the file JC429 on behalf of the client Julian. Okay, so that's very important. Now, let's take the first example of us assuming to have a retainer. Let's say we took that example, right? We said 500 plus tax is your legal fee, and let's assume, $150 of disbursement. So, or maybe I'll say 200, just make it simple. So I'll say 565 plus 200, 765 is my retainer. I'm going to accept that retainer today of 765. I'll take a check, no worries. Give them a receipt, and I've accepted a 765 retainer into my trust account for this particular matter. Okay? And once you've created this, obviously your legal life gets in the way, and this is where you sign retainer letters, you sign the receipts. Julian is really happy that you're going to represent him, and you're going to go about doing your work. So let's say today, it's a simple docket. So you're just going to say, offense issue matter. So client, this is just a docket. I'm just trying to paint the picture here. Okay, so we'll keep it. And this could be anything. I'm just making this up. Let's assume that was what the docket was. I'll toggle this particular docket, and I'll make this a flat rate so that it's simple to represent the 500 plus this tax of $65. Okay. So now you have a docket, and this is really not our interest, but I'm just trying to build some pragmatism into this transaction. Okay. Now let us focus on truly what we're here for, specifically talk about disbursements. So what I'm going to do is I'm going to take an example where I pay for an application fee, assuming it's $100, right off my trust account. Okay? Let's do that first. So let's say for this matter, I'm going to add a new disbursement. Can I pay it from general? Can I pay it from trust? Would this be consultancy expense? Right? I'm going to pay it from trust. And as we said, the date, when did it happen, the amount, how did you pay for it? So maybe I wrote a trust check, and I'm going to give it a description so that you can easily reconcile what this was about. So you can say application fee for the particular file number. Okay? And for representing it in the journals, capturing, so obviously we captured the method, we're capturing who was this for, because I mentioned that to you. That's an important column in the journal. So we're going to say I paid it to the Ministry of Finance. This could be Attorney General, but I'm just going to make it up. And you can even print a check, but I'll not do that. So it's $100 of disbursement. So you just captured the moment. You went to the court, or you paid this application fee, and you wrote a check, paid for it, and you've just captured the same thing into the bookkeeping legal accounting software. Now what's important to notice is this trust receipt of $765, once it's applied, reduces to $665. And the bottom line is that you don't have to recover that disbursement because it's taken directly off your trust account. You wrote a trust check, that $100 taken right out of your trust account, so technically you only have $665 of trust money in your bank, okay? Out of which potentially $565 is going to be taken away as part of your legal fees. So that's why the potential or the projected money left after all this has happened is $100. So if you were to raise an invoice right now, it would reflect technically the bank should have $100 after your trust transfer. Okay? Now let's play within this $100. let's now go ahead and try and apply a disbursement from general. So I'll say add new disbursement, and I'll say paid from general. And let us look at some examples. We looked at some of these examples, billable, unit rate. Let me say this was going to be a photocopy. This is a unit rate, and you can see automatically we capture the unit. I'm going to say 100 copies at about 10 cents. Again, and this is not tax exempt, yeah? So I'm going to add the taxes to this. There's an expense amount. This is how do you pay for it. I'm not going to go ahead and do that. So let's just leave it at that. You're dispersing for 100 photocopies, and you can add description, copies. Okay, and let's go ahead and save. Now that's going to reduce the overall disbursements. You just added $11.30 of photocopies. Now let's add a miscellaneous expense. Okay. Let's take a simple example, and this could be the outsourced work as well, or consultancy work. So let's say court visit. Now, the top part is where you're going to, and this, because this is general, I'm going to show you the example of a mark down. Okay? So this is where you had a third-party consultancy company represent you at court, and you're going to charge your client, let's say, $75. Okay, so with taxes, you're going to charge them $84.75. Whereas maybe your consultancy company charged you $100. So $113 in total. But you're only charging your client $84.75. So this is clearly an example of a markdown, okay, with a loss margin and to about $25, right? But you still capture who you paid this to, and this is where you can say, you know what, I paid this to, how did I pay for it? Either the bank or someone in my firm, or maybe I paid it using my own money. Maybe you just paid cash, right? And I'm just going to say Megan, paralegal consultants. Let's assume that I actually paid cash. So that $84.75 also is now going to be potentially taken away, leaving you with a very small trust balance of $3.95. Now, all this was done prior to raising the invoice. Now, it's important that we raise the invoice because that's the logical step, as I said, the formal document to reflect all real-life transactions. So let's go ahead. Let's generate a quick pre-bill just to make sure that all these transactions are properly outlined, just the way you would expect the original invoice to look like. The preview is, again, just a simple way for you to make any corrections to errors that you may have found in your invoice. Okay, so you've got the 565, perfect. Very important that you've captured each and every disbursement. If you notice, though it says disbursements, there are only 2 disbursements out of your general. Okay, so one was the photocopy, the description, the amount, any taxes, and you've got the $11.30, and then you have the court visit of $75 plus tax. Okay, $96.05. Whereas the first disbursement where we paid for the, I think it was the application fee, there you go, was taken directly out of your trust. Now that's all transactions that are related to the trust account, the retainers coming in or any trust payouts. So this is one such example of a payout from trust, yeah, because money went outside of trust. And the purpose of the money going out of trust was this was a disbursement. And who was it for? It was for the application that you paid using the check number 0989 for this client, and not just the client, the matter, JC492599 of $100. Okay? So let's assume that you really love this invoice. Let's go ahead and actually generate a complete invoice so that it covers all these transactions. I'll mark this even as paid because even after this invoice, there's still some money left, and there's already, he paid you through that retainer. And we'll go ahead and generate the invoice. I'm going to save that information, and then, again, this is just a uLaw style of doing things where we generate the invoice for you to save it. Let's look at that invoice. Okay. The same template. It's just it's not a preview. It's actually got an invoice number, and you've actually done the same thing. It's 5 of 65. It's called the 2 disbursements from general, the 1 disbursement from trust, and that's the balance. Now, 2 more steps as part of practice management. Very important that you move the eligible trust amount from trust to general, right? To do so, we request, in uLaw, you just click on the question mark. We exactly tell you the pending trust transfer. And you can go ahead and click on the transfer button. And this is where, you would go to your bank, or you would write yourself a trust check, whatever is your style of moving money from one trust account into your general account. Okay, so let's say I just wrote myself a check, a trust check, and I can even print it, and that's the check number. I'm going to hit the transfer button. So that's the logical flow of how you'd create a client, add disbursements, raise an invoice, and if there was trust money involved, do the eligible trust transfer from trust to general. And last but not the least, let's just refund that $395. So I'll say a refund retainer of that $395, and I'll give them a check. I'll say refund, and I'll provide that $395 back to Julian because I never used it, or the legal professional never used it. Now, all of this is all the first aspect of the practice management. Now, a legal accounting software such as uLaw gives you the flexibility now to generate all of the documents that are required for you to provide as part of your audit, because which I said that was the second part of the whole equation of a legal professional is to generate these documents that auditors need you to generate. So you've got the ledgers, the journals, and the reconciliation reports, everything that you need. But we've kind of encapsulated the essence of that under compliance, okay? So making it fairly simple. With the limited time that I have, let me run through the specific documents that I mentioned. So first look at my general disbursement. Or actually look at the ledger. So here's my client's trust ledger. I'll do it specifically for this purpose of this demo. I'll do it specifically for the client that we were dealing with, and his name was Julian Caesar. And legal accounting software should give you this flexibility where it actually captures the disbursement, the date, the particulars, which is exactly the template that the Law Society would recommend for its trust ledgers, right? Particulars, receipts, disbursements, and the total revenue, right? And very important, we spoke about the balance in trust chronologically coming down as we start to move the money. So it captures the disbursement, it captures the amount, but it doesn't end here. So let's generate a general disbursement. Now we'll do this for the month of March, because we captured all of this in the month of March. And So if you look at the journal, I'm just giving you an example. We looked at a ledger. I'm just showing you a journal. And I told you how journals capture some extra information. That was the method and who was this paid to. So if I were to come down further and look at my specific transaction, so here is one transaction for JC492599, where I paid $100 plus $13, and I paid it as cash to Megan Paralegal Consultant. So this was that general disbursement that I had. Okay? If I were to look at my trust receipt, this captures the $765 that I got as a retainer. Then I'll look at my trust payments. So that's all the payments that have left my trust. I should be able to look at the application fee of $100 that I paid out of my trust. Okay, so each and every document has its own significance, and we just make it simpler for you to just download these once you've got the data in. The for the particular date range I've got here, for Mr. Julian Caesar, you had the refund retainer, and here's your application fee for the Ministry of Finance. Okay? Last but not the least, we looked at fee book. Because if you notice, the fee book was important because the fee book not only captures the legal fees in an invoice, it also captures the disbursements in a particular invoice for a particular matter. So again, these are all chronologically ordered by date. Here are the two transactions for Julian, 3 transactions for Julian Caesar. There's a legal fee invoice of $565, right? And there was another disbursement of $1130 for photocopies. There was a court visit invoice of $84.75 because the other 100 was taken directly out of trust. This is what you had raised as in your invoice and recovered. The bottom line is, how do you manage disbursements, the types of disbursements to be managed, and once you've managed them, how do you generate the necessary audit documents that are required, journals, ledgers, as well as fee book that capture the touch points of all these disbursements, okay? And this is where I would pause, and again, once again, thank everyone who joined me today for this webinar, and kindly request to use our chat window to ask any questions that you may have. Okay, and then please do use the link provided in the chat to mark your attendance. I will then open the floor now to ask any questions that you may have. Fantastic. We have our first question. I thank you for that. All right, the question is, how did I come to the compliance screen? It was a bit too fast. I do apologize. In uLaw, you generate, again, each legal accounting software may be different, but within uLaw, you go into accounts, document generation, which is really how you generate any document out of uLaw, and the compliance panel right here. In fact, we have compliance right across all of your documents in the context of the menu option. So these are all the file-related compliance documents you can generate. Because the practice management obligations actually have compliance components for various silos of practice, not just for accounting numbers, but for file management, for client intake and communication, right? We've got compliance that are different documents for different contexts. From an accounting standpoint, it's obviously under accounts, and this is where you would generate them. Okay? How are these documents different from the ledger documents available? Actually, they are the same. It's just categorized and grouped differently. So these ledger documents, so client's trust, it's the same report if you were to generate it out of here. Whether you come into ledger and go to client's trust, or whether just you go to compliant and look at ledgers, it's just grouped differently, and we've highlighted the key documents that are important for compliance. That's all. Actually, that's a good question. Okay, if there aren't any more questions, I once again thank you for participating in today's webinar. Very critical that it is a Law Society approved for professionalism credits, so do mark your attendance, do get your credits, and have yourself a wonderful weekend, and we'll look forward to seeing you in our next webinar. Thank you very much. Take care.